What if everything you were taught about money was a lie? Not a small lie, not a technicality, a fundamental, decade-old belief that millions of Americans are holding on to right now, and it is quietly destroying their savings. You've been told your whole life that gold is the ultimate safe haven, that when wars break out, when oil explodes, when the economy shakes, gold goes up. That's the rule. Every financial expert, every book, every advisor, same answer. But right now, in 2026, gold is crashing hard. Over 20% wiped out in weeks, the worst collapse since 1983. And oil? Oil is skyrocketing past $100 a barrel and climbing higher every single day. The same event, two completely opposite reactions. And if you don't understand why, your money is at serious risk. Stay with me because in the next 10 minutes, I'm going to show you exactly what is happening, exactly why the old rules are breaking down, and exactly what smart money is doing right now that the average person has no idea about. And that last part, trust me, you do not want to miss. Let's go back to the beginning, because to understand the crash, you need to understand the rise. In 2025, gold had its best year since 1979. It went from $2,600 all the way to over $5,600 per ounce, more than double in 12 months. Central banks were buying it, hedge funds were buying it, regular families were buying it. Everyone piled in. And the logic made complete sense. America had over $36 trillion in debt. The dollar was weakening. Inflation was unpredictable. Geopolitical tension was rising everywhere. Gold felt like the only safe place to put your money. And then, in early 2026, everything flipped in less than 24 hours. Here's what happened, and pay close attention here because this is the part the news is not explaining properly. A major military conflict broke out in the Middle East. The Strait of Hormuz, a narrow waterway that carries roughly 20% of the world's entire oil supply, was disrupted almost overnight. Crude prices exploded past $100 a barrel, at one point hitting $119 per barrel. Because oil doesn't just fuel cars. Oil is the bloodstream of the entire global economy. It powers factories, it ships goods across oceans, it makes fertilizer, it heats homes. When oil doubles, the cost of nearly everything doubles with it. So, inflation, which was already a problem, suddenly became a monster. And here's where gold got ambushed. Now, before I explain the mechanism that crushed gold, if this video is making you think differently about your money, hit that subscribe button right now, because every week Albert breaks down exactly what's happening in the financial world in a way that actually makes sense. Here's the chain reaction that most people never see coming. When oil spikes, inflation spikes. When inflation spikes, the Federal Reserve has one weapon: keep interest rates high. Raise them if necessary, make borrowing expensive to slow the economy and cool prices down. The Fed held rates at 3.5 to 3.75% and announced that rate cuts are completely off the table for the rest of 2026. Not delayed, not paused, off the table. And this single announcement, this one decision, triggered a gold massacre. Here's why. Gold pays you absolutely nothing. Zero interest, zero dividends. You hold it and wait. That's fine when savings accounts earn almost nothing too, because you're not giving up much by holding gold instead. But when interest rates are high, when bonds and savings accounts are paying real returns, suddenly holding gold feels like a punishment. You're giving up guaranteed income to sit on a metal that pays you zero. So, institutional investors, the hedge funds, the pension funds, the big banks, they started rotating out of gold and into interest-bearing assets by the billions, and the price began to fall. But wait, it gets worse, because that was only the first punch. The second punch came from the US dollar. When global panic hits, and I mean real panic, there's one asset every country on Earth runs to above everything else. Not gold, the US dollar, because the entire global financial system is literally built on it. Money flooded into the dollar from every corner of the world. The dollar index climbs to its highest level in months. And here is the brutal math that kills gold every single time this happens. Gold is priced in US dollars, so when the dollar surges, gold automatically becomes more expensive for every buyer outside America. A European fund, a Japanese investor, an Indian family, they all need suddenly more of their local currency to buy the same ounce of gold. Demand drops, price drops. Fast. Stronger dollar, cheaper gold. It happens almost every single time. And then came the third punch, and this one is the most ruthless of all. It's called forced liquidation, and most people have never even heard of it. When markets go into full panic mode, big institutional investors face something called margin calls. This means they borrowed money to invest, and now their lenders want that money back, immediately, today, not next week. So what do they sell? They sell whatever is liquid, whatever has a profit sitting in it, and gold, after doubling in 2025, had enormous profits sitting in it. Millions of investors dumping gold not because they believe it's worthless, but because they desperately need cash right now. And every single one of those sells pushes the price lower, which triggers more margin calls, which triggers more selling, a waterfall that feeds itself. This is what a 20% crash in weeks actually looks like from the inside. Now, here's the part that will genuinely shock you. While all of this paper selling was happening, while futures contracts and ETFs were being dumped by the millions, the physical gold market told a completely different story. Physical demand held steady. Buyers, jewelers, and institutional investors who wanted actual gold, real bars and coins, kept buying. Some dealers couldn't even get enough supply to meet demand. You see, there are two gold markets operating simultaneously right now. The paper market, where traders move billions using contracts and derivatives they never intend to actually collect, and the physical market, where real gold actually changes hands. And right now, they are telling completely opposite stories. The paper market is screaming panic. The physical market is quietly accumulating. That gap between paper price and physical demand is one of the most important signals in finance, and most people never even know it exists. Now, let's talk about oil, because while gold was getting destroyed, oil was doing something completely different. The same Middle East conflict that triggered the gold crash sent oil into a completely different direction. Supply disruption means less oil reaching the world, and the world cannot simply wait for more. Factories still run, planes still fly, ships still sail. Demand does not stop because supply is disrupted. So prices explode, and they stay elevated because bringing new oil supply online takes months, sometimes years. There is no quick fix. And here is the painful irony that most people completely miss. The same single event, one conflict in one region, simultaneously crashed gold and skyrocketed oil. Not through different mechanisms, through the exact same chain reaction playing out in opposite directions for two different assets. That is how interconnected and counterintuitive modern financial markets truly are. So what does all of this mean for you? For your savings, for your retirement, for your financial future right now in 2026. Here is the truth that Wall Street won't say clearly. The fundamentals that made gold valuable have not disappeared. America's debt is still over 120% of GDP. Central banks around the world are still accumulating physical gold at historic rates. JP Morgan still has a year-end price target of $6,300 per ounce. Deutsche Bank sees $6,000. These forecasts were made before the Iran escalation, and if anything, the long-term case for gold just got stronger. What you're watching right now is not gold dying. It is gold being temporarily repriced by a specific set of short-term mechanical forces, forced selling, dollar strength, and rate expectations, not by any change in gold's fundamental role in the world. Every single time this pattern has played out in history, 2008, 2020, 2013, the paper sellers eventually exhausted themselves, and the patient buyers who understood the difference between short-term price and long-term value walked away with extraordinary gains. And here is the final lesson, the one that separates people who build wealth from people who just watch the news and stay confused. Markets are not logical in the short term. They are emotional, mechanical, and reactive. A war breaks out. Gold should go up. It goes down. Oil spikes. Stocks should crash immediately. They don't always. The most obvious outcomes almost never happen cleanly or immediately. This is why the average person who panics and sells at the bottom loses every single time, and the informed, patient investor who understands what is actually happening underneath the headlines, not just the headlines themselves, is the one who builds real generational wealth. The people who bought gold when everyone was dumping it in 2008 made fortunes by 2012. The people who bought energy stocks when everyone said oil was dead in 2020 made enormous gains by 2022. The pattern repeats. It always repeats. And most people miss it every single time because they are reacting to the surface when they should be reading the foundation. Now you understand the foundation. Gold is not dead. Oil is not going to $300 forever. The world is not ending. What is happening is a brutal, temporary repricing, and the people who understand that are positioning themselves right now while everyone else is panicking. The question is, which one are you going to be? This is Albert, and I will see you in the next one.